is CO Money with Michael Yorba, Mervyn Price.
Hello there, Michael.
All right, our next guest, Natalie DeMarco, President, Co-founder, Tycon Partners. Natalie, welcome to the show.
Thank you. Nice to be with you, gentlemen.
All right, my pleasure. Natalie is an accomplished executive entrepreneur and consultant with a proven track record, experience, and success, including financial services, investment advisory, technology, and manufacturing. And she's operated in a diverse environment with senior management and CEO positions, and both in public and privately traded growth stage companies, domestic and foreign-based corporations. So, Natalie, you were on the show once before, but we just didn't give you the time you deserve. I want to open this all up to you and bring us back into Tycon Partners, what they do, how they do it, and then we'll walk through the Reg A Plus and some of the key questions we have for you.
Well, at Tycon Partners, we specialize in Regulation A Plus, and I'll explain a little bit in terms of Tier 2, but we specialize also with Tier 2 issuing companies. So basically, our whole world is Regulation A Plus. We spent a good year or more, I'd say probably went into the 14-month R&D process because we really wanted to do our due diligence since this was such a new space. So we wanted to do it right when we started doing it, and we're glad we did.
Give us, I'm sorry to interrupt you. Please continue.
No, I was going to say maybe I should give you some background on Regulation A Plus and what it is.
Absolutely.
Okay. Well, let me start first with some background on Regulation A Plus, or also known as Reg A Plus. So looking to encourage small business growth and employment by lowering, regulatory hurdles for companies, on April 5th, 2012, a landmark and bipartisan legislation, go figure, called the Jumpstart Our Business Startups Act, better known as the Jobs Act, was signed into law. And that was, again, in 2012. The Jobs Act greatly expanded entrepreneurs and their small and medium-sized businesses' ability to access growth capital, allowing them to publicly advertise their capital raises. Initially, private companies could only fund from accredited investors, which is approximately 2% of the population. So then, in June of 2015, 3 years after the Jobs Act was signed into law, Title IV, which is Regulation A Plus of the Jobs Act, went into effect. So for the very first time, Title IV allows U.S. and Canadian private companies to raise money from non-accredited investors, which represents approximately 98% of potential investors. So getting back to the Tier 2, the SEC has provided for two tiers under the rules. Tier 1 allows for companies to raise up to $20 million in a 12-month period, with not more than $6 million in offers by selling security holders that are affiliates of the issuer. Unaudited financials are allowed, and they're required approval by all states. Tier 2, which is what Tycon Partners focuses on, allows companies to raise up to $50 million in a 12-month period. So each year you can raise up to $50 million, with not more than $15 million in offers by selling security holders that are affiliates of the issuer. You have to have your financials audited annually, and there's no state approvals required. Essentially, Regulation A Plus is an alternative to a traditional IPO, which makes it easier for smaller early-stage companies to access now general public growth capital. So a lot of people call it crowdfunding, but $50 million, as we say, is too big for a crowd.
Right.
And that's under Title III, which is Title CF, Title III CF crowdfunding. So it's really interesting. I mean, in the past 2 years, things slowly got off to a role, and there was some speculation in the market if this would work, and now it's moving forward quite nicely.
Natalie, what type of companies benefit most from Regulation A?
The best way to say that is just simplify it. Small to medium-sized companies that want or need to raise growth capital, and they have to have general public market appeal. There has to be something that you're going to appeal to the consumer, the general public, as well as investors, but both non-accredited and accredited. And Reg A Plus will not only provide the capital to grow their business, but also the exposure during the process of the Reg A Plus offering to market their products or services.
That's what I wanted to dive into on that.
Yeah.
Break that out for us, because can you just come out and get on the radio? Hey, we're doing a Reg A Plus, and this is where you click on the website. How does that work?
Well, there's a long process. In the beginning, you have to be prepared to do an IPO. But Regulation A Plus eliminates a lot of the arduous, normal, traditional, conventional IPO processes, and that was the whole purpose behind it, to streamline, to make it easier, to get rid of some of the heavy regulatory and the costs. So to answer your question, when first you have to be qualified. You have to start your registration, and you have to have the SEC qualify you. The SEC doesn't approve you or opine, but qualify you for the Regulation A Plus. So skip forward through the audit process, the qualification process. So now you're ready to go. You're ready to do your offering with the public. Well, think about it. You're marketing your Regulation A Plus and you're offering to investors, and guess what? Everybody's now learning about what you do. So in essence, it's a marketing on steroids for what your company did to begin with, even though you're out there, raising general public growth capital.
Let me drive in on that one. Marketing. What does that mean? I mean, can you go on the radio? Can you go on TV? Or do you need to go through a third party like a broker that has got clients that they've been in business with for over 3 months, normal private placement rules?
Well, now we're into a half-hour conversation, because we're gonna have to dig into specifics, because there's many options. To answer your question, you can use a BD. You don't need a BD. You could use an investment banker. You don't need it. You don't necessarily. It's up to the issuing company. And again,
you need somebody like you to wind you through that process, so you don't step into a bear trap. Is where I'm coming to.
Exactly. And let me also mention that Regulation A Plus also includes real estate projects and developers as well. There's been a lot of real estate we don't do them. Tycon Partners doesn't specialize in real estate, but there are companies out there that do.
Okay, so let's circle back just a little bit. Reg A Plus pros versus traditional options for funding. I mean, let's walk me down that road.
Well, that's the key, right? And the best way to answer that is to compare some of the Reg A Plus with private equity options, but basically, founders can keep control versus, you're looking at VC private equity, private placement options versus Reg A Plus. So there's a lot of benefits, including costs, but also control is another key. And again, there's probably a list of 10 comparisons that we could go through. Less dilution, public stock to use as capital, short time frame for liquidity, et cetera, et cetera.
All right, we've got about a minute and a half, maybe 2 minutes at the most. Cost comparison? Are you saying that Reg A Plus is less expensive as a general rule than a normal?
Yeah.
Okay.
Oh, big time.
How much?
That's a big plus. Oh my gosh. When you do a regular IPO, I mean, your legal fees can be into at least the $1 million range. To start a Reg A Plus process, you need $250,000. And may I just mention that since the inception of Reg A Plus, now there are companies listing on major exchanges, which is huge, and that's all happening in the last 6 weeks. And there's more to come. And I really believe that Reg A Plus is evolving and paving the way for more companies to be able to grow efficiently.
Where do you see this going? I mean, do you see that this creating a massive influx of new opportunities for equity traders that are coming into the exchanges with this?
Well, yeah.
Or is it trickling? Is it like a 5-year ramp up?
I really see that, the first 2 years everybody was going, wow, great idea, but is this going to work? And now in the last 6 weeks, and since inception, there's been over 150 offerings. And the issuers have sought over $3 billion in aggregate. So thanks to Reg A Plus, these small and mid-sized issuing companies now have a pathway to list on a major exchange. So there's been 1 on the NYSE American and 3 on NASDAQ in the last 6 weeks. So guess what? That's your proof in the pudding. We have, including our clients that are in the registration process and they're getting ready for NYSE American listings. So this is the key where now you're going to get the attention of, not only accredited investors and institutions knowing that, hey, this is for real. This is now turning out to be a successful pathway for these small, mid-sized companies. But remember, non-accredited as well. And they've never been invited into participating in an IPO in the past.
Got it. Natalie, we've got to run. Thank you for being on the show. I really appreciate this.
Thank you so much.
My pleasure. Natalie DeMarco, President, co-founder of Tycon Partners, tyconpartners.com. Coming up on the other side of this break, we'll be right back with Tim Bost, editor and publisher of Financial Cycles Weekly. You've been listening to CEO Money with Michael Yorba
and Mervyn Price.
We'll be right back.